you don't know, this is something we discussed about earlier today. The SEC apparently will not ban payment for order flow. So they are kind of flip-flopping back based on what they said a few months ago around banning payment for order flow. Now, some people might think, does this mean that AMC stock will never do what it's supposed to do? In other words, is the short squeeze in AMC stock somehow not over or limited, all right? Are the price target still the same? Well, let's look at the different scenarios here that we have on hand. Payment for order flow is one of the reasons why AMC has not done what it's supposed to do. So banning payment for order flow was a pretty good, great catalyst to push the share price a lot more higher, even without a short squeeze in play, because a bunch of other, the little funds or the little short sellers that came into play will, start rushing through the door, and it will cause, the price to, we've been here before. Now, this not happening, of course, will have an additional selling pressure, because some people came into this play because they were kind of trading the news around payment for order flow being banned. All right. So that is number one. This is something that I see, making things. So scenario number two, which is the opposite, view on here, which is not the negative view, is payment for order flow was never the only reason why AMC should have squeezing, whatever you want to call it. Payment for order flow is not the only reason why AMC should have done what it's supposed to do. As a matter of fact, payment for order flow was just, a cherry on top, because you look at the numbers from a fundamental, from a technical standpoint, from from a short squeeze standpoint, you look at everything else. The short squeeze is still very much alive. So the first reason why they came in here was because AMC was supposed to file bankruptcy. It didn't file bankruptcy. As a matter of fact, for the last 2 years, AMC is totally shifting the boat, shifting course, and turning things around for the better. So it doesn't even make sense for AMC not to be trading in the 30s right now. So yeah, number two, the short interest numbers. MarketWatch, Bank of America, all of the other banks, all of the other big, research out there are still showing AMC being top candidates on short squeeze potentials. Not even counting the Doppel's numbers, all right? So that's number two. Number three, the amount of people still buying and holding AMC has not changed. AMC is still among the top stocks being bought heavily in North America and outside of North America. So that hasn't changed, all right? Now, let me ask you this question to end. They tried to bring the share price down since AMC was at 70. All right. So from 70 to 50 to 40 to 30 to 25 to 20 to 8, 9 out as we are right now, what has changed? Pretty much nothing. People are still buying and holding. AMC is still, highly shorted and way oversold, and the shorts have not covered. So nothing has changed. The only thing that changed here is the different tactics they're using to try to shake people off and get them out of this play. Because clearly, if they didn't think they were losing, they would have covered since 2 years ago. But they did not, for whatever reason. They did not, all right? So it doesn't change anything, in my opinion, around why AMC shouldn't do what it's supposed to do, all right? Now, the timeline may be a little bit different, but we're going to cover that in a separate video that I'm going to put out later this evening. But let me know in the comment section, guys. I want to hear from you. Do you really think, or do you share this idea from some people that because now payment for order flow is not going away, the share price, the short squeeze in AMC is over? Let me know down below, please.